Hello ladies and gentlemen, it is the Wonder Kid here. I hope you're all having a fantastic day. A warm welcome to this video. Guys, as you saw from the title in this video, I'm going to be explaining to you SMT divergence, okay? Now just a few quick notes before I go into this video. Even if you understand SMT divergence already or divergence in itself, I do highly recommend that you watch this video all the way to the end because there's something that I might explain to you that will help you understand it in a different way, okay? So guys, please do watch this all the way to the end to get the maximum value out of it. And number two, I do now have a Discord server open. I have a free group and a private group. So guys, feel free to check that out in the description below. Again, feel free to join whichever one. There's plenty of value packed in either. But again, feel free to check that out, like I said, in the description below. So guys, let's get straight into it and talk about SMT divergence, okay? So what is divergence in itself? Well, typically, we're going to be using divergence when we're comparing two or more markets, okay? And what is it in itself? Well, what we're doing is we're comparing very correlated markets or very inverse correlated markets, for example, okay? So say, for example, we understand that the S&P 500, the NASDAQ, and the Dow Jones is correlated, okay? We can understand that they move in a very, very similar way. For example, if one makes a higher high, we typically see the others make a higher high as well. However, when one of them is out of sync, so when one of them makes a lower high and the other two make a higher high, then we start to see divergence because one of the pairs is not behaving as it should. There's something that is about to happen, or we're seeing something that may trigger a move, okay? So guys, this is a visual representation. I've basically drawn a few arrows just to highlight the concept, and I will be going into the charts and showing you this concept afterwards. But as you can see, let's say that this arrow on the left is the S&P 500 and this arrow on the right is the NASDAQ. So as you can see, guys, at the very bottom, the S&P 500 has made a higher low, okay? We can see that this low is higher than this low, okay? So if I drew a line at this low, we can see that the next low, this one, did not break that line, okay? However, over here we can see on the NASDAQ that we have broken that line. Price has made a lower low relative to this low. You guys can clearly see the difference between the two, right? And when that happens, we have divergence, okay? And when we can see that, a lot of people do like to draw a tool. They might just say, okay, well, you know, this is going like this. Maybe highlight it in a different color and then show the other one is not behaving and is going and the other way. Okay, so again, you can draw it like that. You do see traders draw it like that. Now, one of the things to understand is that this cannot be used just as a trade plan in itself. Even though you see divergence, right, it can be used as a confluence, but not something in itself just to be used as a trade idea. Because divergences can occur quite often, quite frequently, but it doesn't mean to say that, okay, we've got divergence here. We can see that this one broke this low. So then even if we're in a bullish market, as you can see for both, then there's an expectation to break the highs. Okay, again, that is not true. Okay, remember, we've got to use divergence as a confluence, not just a whole trade idea to say, okay, we have divergence now. That means for sure one of them is going to fling up and break the highs because we are in a bullish market, okay? So remember that. That is the key point with divergence. It has to be used on top of other things, just like I've explained it to you in my previous videos. So say, for example, if you had a bullish bias for the day, you had a bullish bias on the hour and the 15, and then you saw this divergence, and you saw an expansive break of market structure. So say, for example, within here, let's say within this area here, if you zoom down into a lower time frame, and you saw price do something like this, and then you saw a really big expansive move, then you can look to get involved in longs, okay? Because again, you can seek for order blocks or fair value gaps, okay? For example, down in this price action. But like I said, I've stacked other confluences there. Like I just said, I was talking about biases, daily bias, hourly bias. I was talking to you about expansive break of market structure. And again, we have divergence. So those are few reasons to enter in a bullish trade, okay? Again, it all depends on your trade plan. But the key thing here to understand is that when we have divergence, an alarm bell should ring in your mind saying, hey, something is up, okay? So one of the markets are weaker relative to the other and something could potentially happen, okay? Again, for example, like I said, you can't use this as an idea in itself, just on its own, because the market could still just come up, failed to break this high and then continue down. Okay, same for this side. It can just come up and then shoot down. So even if you saw this divergence down here, for example, and you look to enter in longs, and you said, okay, well, it's got to go up because we're in a bullish market and we've got divergence, we've got to break this high. You'll see that sometimes it doesn't. It will just come up and fail, okay? Because we haven't read either the higher time frame narrative or you have not stacked the confluences well enough, okay? So guys, that is just the simple concept of divergence. Essentially, between correlated pairs, correlated markets, we're seeing an issue. We're seeing one of them make a higher high versus the other one making a lower high, and same for the other side, okay? Essentially, when we're matching the highs and the lows, one of them is not behaving as it should, okay? So guys, we're going to look in the market now and see if we can spot this. So I'm actually going to exit this. And you can see that I've brought up the charts of S&P 500, NASDAQ, and the Dow Jones, okay? So guys, as you can see, they're correlated. You guys can see that they're moving in a similar way. One of the things you can see that when we're comparing this high to this high, you guys can clearly see we've come down, okay? You guys can clearly see that. Now, if we look at the NASDAQ, you guys can see, again, we've made a lower high. Got a high here, down here is the lower high, okay? Now, what's happened on the Dow Jones? You guys can see that here, we've actually made a higher high. Can you guys see that? That is in itself divergence. Now, again, I'm comparing 3 different markets here. You can just do 2, but obviously you need a minimum of 2 because you need to compare one market to another. But what does this tell us? It gives us an alarm bell saying, hey, the Dow Jones is, for example, you can say oversold, but you can see it's overshot its welcome. It's come up, it's swept a high over here. And I will actually just change this to make it a little bit more clearer. Let's just say liquidity. It swept this liquidity at this top and then shot down. And you guys can see how volatile it has shot down. So again, if you saw this divergence, you had a bearish bias on the day, and you saw on a lower time frame, again, as you can see, currently we're on the 15-minute time frame. On the lower time frame, if you saw a market structure shift with a fair value gap, you can look to get in shorts and, of course, target a low. And as you can see, price shot down and took the low. Again, that's another trade idea. But as you can see, guys, this is the whole point of divergence. We're comparing markets, correlated markets, and we're seeing how they are moving and when one of them is not moving in line with the other, okay? So guys, make sure that you can check this out, backtest it or see it in the markets, compare a couple. But in a nutshell, this is SMT divergence, okay? So guys, I hope you enjoyed this video. If you had any comments, please feel free to write it down in the comment section below. Feel free to check out the videos I've already done on some of the ICT concepts that I've understood. Of course, if you really want to hear it from ICT himself, then you can watch his videos. Again, these videos are designed just to be very focused on the concept itself. So guys, I hope you enjoyed it. Like I said, feel free to give it a like and a thumbs up, and I'll speak to you guys very, very soon.